Today we're going to review type 1, type 2, and type 3 M and W patterns again. We're going to look at some examples from last week. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. It's been a big weekend in Perth. Last week we had some monster moves on the British pound crosses. And again, looking at the daily charts, I think we're in for some more very similar opportunities this week. A lot of traders had some huge days, Thursday, Friday. British pound was big all week. Pound New Zealand, pound Aussie, Friday. Pretty much all the pairs gave fantastic trade setups. I received a ton of questions over the weekend about all kinds of the days last week, different questions about three push patterns, M's, W's, all these types of scenarios, coming back to our basic structure, high and low of the day, timings, round numbers, engulfments and pin hammers, and of course understanding what that M and W formation represents when we see it. And we talk about locking in the high or locking in the low. We're going to go over some specific examples today to really clarify your understanding of what it is that you're looking for, and in the bigger template of the week, the high and the low of the week, because those opportunities, when they present, as the range expands, increase your risk reward opportunities. So again, thank you for all the comments and questions, ton of feedback, and again, some traders have had some really big days last week. So just to review, we talk about the basic M and W formations, the type 1, the type 2, and the type 3. Now these are just the standard presentations. There's other types of days that we'll set up. We haven't really talked a lot about this straight away, but the level 1 days, level 2, the trend trade days. And of course, there are going to be days where the market is just consolidated and range bound in a narrow range. And we talk, or I call those day zero. Those are the days that can precipitate some potentially very large trades in the next day or two setting up in the markets. The timings are critical. That's what allows us to narrow our focus down to the 12 candle window, 8 to 11 p.m. for Asia, 2 to 5 a.m. for London, Europe and London, and then 8 to 11 a.m. New York Eastern Standard Time. So again, I've received a lot of questions about timings and Asia's 8 hours. Why is it only a 3-hour window? Go back and watch the other videos. I'm concerned about the high and the low that presents in that Asian hour, in that first 3 hours, the hour prior to the equity markets opening, the hour of the equity markets opening, and the hour after. Now specifically, I like to look for certain setups in that equities hour at the high or at the low of the day. If the market is still in progress or still moving and has yet to confirm that, then there's no trade setup. So we talk about using the round numbers, specifically 50s and zeros. I look at the quarter levels as trapped volume, and we're going to go over some very specific examples. But some simple concepts I want you to start to understand is that if the market is working up into the high, we're looking for an M formation. If you don't get an M formation and the market reverses off of that, then you may be in a breakout pullback situation. We're not trying to chase the moves back and forth. We're looking for the market to set up structure and then work one side for a move either down or working one side for the move back up. That is completely different than a trend trading setup. So it's really specific to the type of scenario. And then again, as the week evolves, if you're up high, down low, or in the middle, and we talked about if you're in the middle, you want to make sure that you're in the direction of the underlying trend, and there's specific setups that we'll go over from last week. So the type 1 setup, we'll have usually again a 25 pip consolidation. Sometimes it will be between the numbers, other times it will be around numbers, trapping volume where the number itself is the median price of that 25 pip box. If the market breaks out, we're looking for potentially a 25 to 50 pip movement before that reversal pattern sets in for our type 1 M or W formation. Now again, what tells us that we're not in a breakout is that this movement occurs prior to arriving in our 12 candle window. If this market breaks out at the beginning of our 12 candle window, that is completely different. Whereas now we will still look for that 25 and 50 pip increment marks for that reversal opportunity to present either in the gap time or as we head into the next 12 candle window of the New York session. Same thing goes on the downside. So typically speaking, we will see that market break through the highs and then continue up 25 to 50 pips before giving us that consolidation for our reversal opportunity back in the other direction. If this market is in a trend mode, it will work back down into that breakout area with a W formation for most likely a type 3, in some cases a type 2 reversal or continuation in New York, depending on how that market sets up. The type 2 will usually be working both sides of the high and the low before at some point working the high, engulfing and reversing. And we saw some classic type 2 setups on Friday. The same applies for the W reversal. A lot of this comes back to identifying the anchor point or the peak formation in Asia and then watching whether or not they work away from that as the day progresses, or if they're working back and putting a new peak in place for that W or M patterning. The type 3 will typically, we'll see when the market is going to revisit lows, will put peak formations in place, working the high, dropping down, and then working into the lower high, usually into round numbers for a move back to retest a low. And the same applies for the W type 3, and in some cases we will see these also in strong trending markets. So we talk about Monday, Tuesday forming the initial balance of the week. Typically we'll often get one of these setups on a Monday and a Tuesday because they put peak formations in place to establish our initial balance. So we're going to again look at last week's trades and then look at today's as the market is setting up for potential thesis about how these markets can play out. As we get to the beginning of that 12 candle window, they may be working the low and come off the low and go towards the high of the day, changing our thesis. Or they may come out of off the high of the day towards the low and start working the low. So as we're trading this in live time, we have a thesis based on the bigger box that we're trading inside of, because we'll be inside of a high and a low, and there may be a breakout pullback situation, or we may be working up into a high or into a low, as we saw in the pound New Zealand on Friday, for a potential type 2 or a type 1 setup like we saw in the pound Canadian. So let's look at some specific examples of these patterns. And again, there are different variations, but the basic template are the type 1, type 2, type 3 each day, and then tying that in with our bigger thesis of the weekly template. Are we up high? Are we down low? If we're up high, we can expect potentially an M formation for a reversal. If the market starts working the low, then we can potentially expect that that trend may not be over. And we talked about day 1, day 2, day 3. So let's look at some examples. Again, thank you for the feedback and for hitting the like button. A lot of fantastic questions, but we'll reinforce these setups. We'll look at each day and those pairs for some of these textbook setups that occurred, most of them at the numbers, at the timings, for the reversals and for the continuations. Stay disciplined. We're going to get some huge moves this week. Stay focused. Keep it simple. Wait for the simple setups to evolve. Don't chase the moves back and forth and get caught in the wrong direction. Have a great trading session, and may the markets go with you.
Okay, traders, again, just reviewing type 1, type 2, type 3, M and W formations. Type 1 typically will be 25 to 50 pips above the Asian range or below the Asian range in the case of the W. Type 2 typically will be at or right near the high of the day. Same thing with the W formation for the low of the day. And a type 3 M formation will typically form near or at the low of the day. Same thing for the W formation. It will form at or near the high of the day, almost in a cup and handle sort of format. And we'll take a look at some of those examples, but also the different variations, how they may present the simple format, the extended M formation, or the shortened M formation, and of course the simple W formation, and the short-formed W formation, and of course the extended W formation. And we'll look at some examples of how they may present in last week's trade setups. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to look at some specific examples of Type 1, Type 2, and Type 3 M and W formations, and how to potentially identify those setting up in live time. So we're looking at a Type 3 W setup. And again, just going back to our simple concepts, we have our Asia high-low. The market breaks out of that Asia high-low as we head into the 12-candle window of the Europe-London Open. Blue line represents the previous day's high. The market continues to move through the high of the previous day before going into consolidation outside of our 12-candle window and then pulling back with one stop hunt bar back into the range. So again, just no indication whatsoever of a reversal or a sell or anything else other than trading with the trend. The market breaks through the previous day's high, works back into the previous day's high, pulls back to the numbers, hits it a second time, 1, 2, pulling back, and we're in our US session 12 candle window. And again, that first hour typically will be a stop hunt trap. So this downward movement, getting traders to potentially chase the move off the high, thinking they're going to go back for the reversal trade. We hit it pulling back into the equities hour, and they hit it a third time before engulfing off the previous day's high and taking out the middle structure. We talk about a type 3 M and W forming the W formation forms at the high of the day on a type 3, and obviously on the low of the day if it's an M formation for a type 3M. This market broke through the previous day's high, came back 1 push, 2 pushes, 3 pushes in our 12 candle window in the equities hour. And again, just another example of how if we use the clock to our advantage, we have the first hour sideways after the second push, and that third candle of the second hour engulfs that middle structure for our right shoulder of our W formation on top of the previous day's high. And that reversal on the third candle after the close makes this a 1 hour pin bar. Now the market obviously takes out the high of the day, going into consolidation, trapping traders with the fake M formation. So again, notice the one large bull candle. All of that structure is inside of that one candle. So this is not really a middle structure, and this is not an engulfment. This is all price action inside of one candle before going sideways, trapping traders trying to short that at the numbers before continuing. So again, the other thing to remember is that this market has already given us a trend trade with the trend. So anything up here, you're counter trending the existing peak formation. This price action is inside of a larger candle. Type 3 W formation. This is a great example of how you can get variations of these patterns. We're looking at the pound Canadian, and we had our Asia session high and low. Market at the beginning of the Europe 12 candle window hits the high, but then all of a sudden breaks down through the low. So we break out and then we come back 1, 2, 3 engulfment, and then the market gives a bull pin hammer underneath that peak formation. So we have a breakout in the downward direction underneath of a peak formation high bull candle, where we have our consolidation in the Asian window, breakout, pullback, engulfment, pin hammer, and the follow through, where we would call this our shortened M formation for that measured move down. We talked about extended M's and extended W's and shortened M's and shortened W's. But again, the market can throw little curveballs, but consolidation was roughly between the quarter level round numbers, 75 and 50 and 25. The breakout occurred on the downward direction. We're at the high of the week from the previous day. Peak formation, high bull candle, breakout, pullback, engulfment, pin hammer off the numbers for a measured move back down towards the previous day's U.S. session breakouts. And again, lastly, just another example of how the market can extend. So we saw no pullback in the U.S. session. The market extended its move into the next day's session, continuing in the Asia consolidation before making a new high. And again, we see the market has given us our Asia high-low, our low of the day, a higher low. So immediately now we're broken into the upper quarter boundary below the round numbers at 50. But the market is working the high, pulling back, taking out the low of the high bull, then hitting it again a second time before giving us a double bear candle engulfment, and then a large breakthrough engulfing the entire upper structure. And we have a middle structure now for our middle of our M structure. And then the bear pin hammer following the full engulfment of all this trap volume. So all this volume above the previous day's high is now trapped on the engulfment candle and the pin hammer for the follow through in the measured move back down. So an example, sort of a borderline type 1, type 2 M formation. The M is at the high of the day, 25 pip box above the Asian range, but this is a unique situation in that the market did not pull back. It just continued its move, again trapping traders chasing the technical trend and getting caught in that upper quarter before shifting away, consolidating, and then dropping for the measured move back towards the previous day's low. And we'll finish with an example from the euro. So again, just another example of how peak formation highs and lows. We have the U.S. session high, but we also have the high of the day as we head into Friday's Asian session. The market breaks out, pulls back, pushes 1, push 2, push 3 pushes before continuing the move higher. And as we head into our Europe London 12 candle window, we get not only do we have our Asia high low, but we have higher lows as the market goes 1 push, 2 push, and then a 1, 2 pull back 3. We have our middle structure, engulfment at the quarter level at 75 at the high of the day for our type 1 M structure. And then the market drops down, goes into consolidation, engulfs again off the previous day's high to break down through. And again, just start picturing all of this above numbers. Every time we get volume, if they're working the high, think M formation. And then if this market shifts away, you have to see all of this volume is trapped. It's trapped above the numbers. And when they come through here, they will not go back, because if they do, that means they are allowing traders who are now down money to get out with a smaller loss or no loss at all. And once they have that volume trapped, they are going to go after where the other money is and hit those stops, margin out the ones up top, and continue that move until they exhaust it on a 1 push, 2 push, 3 push pattern, coming back into consolidation, taking out the last peak, and then going sideways into the Asian session. So hopefully you got some value from today's video, traders. Again, looking for simple patterns. Are they working the high, working the low? If they are, what time is it? And if they're in 12 candle window and they're working the high and it's not going anywhere and we're at numbers, you got to be thinking, looking for that M formation or the W formation at the timings. So hopefully keep it simple, traders. Keep getting better. Stick to the basic setups and look for the moves for 50 or more pips. Have a great trading session, and may the markets
Hi traders,
go with
it's
you.
Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.